Number 10, capital and operating expenditure. Firstly, capital expenditure, which is known as CapEx. Capital expenditure, CapEx, are funds used by a company to acquire, upgrade, and maintain physical assets such as property, plant, building, technology, or equipment. CapEx is often used to undertake new projects or investments by a company. Making capital expenditure on fixed assets can include repairing a roof, purchasing a piece of equipment, or building a new factory. This type of financial outlay is made by companies to increase the scope of their operations or add some economic benefit to the operation. CapEx can tell you how much a company is investing in existing and new fixed assets to maintain or grow the business. Put differently, CapEx is any type of expense that a company capitalizes or shows on its balance sheet as an investment rather than on its income sheet as an expenditure. Capitalizing an asset requires the company to spread the cost of the expenditure over the useful life of the asset. The amount of capital expenditure a company is likely to have is dependent on the industry. Some of the most capital-intensive industries have the highest levels of capital expenditure, including oil exploration and production, telecommunication, manufacturing, and utilities industry. Secondly, operating expense, which is also known as OPEX. An operating expense, sometimes called revenue expenditure, is an expense a business incurs through its normal business operations. Often abbreviated as OPEX, OPEX, operating expenses include rent, equipment, inventory, marketing, payroll, insurance, step costs, and funds allocated for research and development. One of the typical responsibilities that management must contend with is determining how to reduce operating expenses without significantly affecting a firm's ability to compete with its competitors. Operating expenses are necessary and unavoidable for most businesses. Some firms successfully reduce operating expenses to gain a competitive advantage and increase earnings. However, reducing operating expenses can also compromise the integrity and quality of operations. Finding the right balance can be difficult, but can yield significant rewards. Alright, I think it's best if we review the differences between CapEx and operating expenses, OPEX, to bring this section together and increase understanding further. So capital expenditure should not be confused with operating expenditure. Operating expenses are a short-term expenses required to meet the ongoing operational costs of running a business. Unlike capital expenditure, operating expenses can be fully deducted from the company's taxes in the same year in which the expenses occur. In terms of accounting, an expense is considered to be CapEx when the asset is a newly purchased capital asset or an investment that has a life of more than 1 year, or which improves the useful life of an existing capital asset. If, however, the expense is one that maintains the asset at its current condition, such as a repair, the cost is typically deducted fully in the year the expense is incurred. There are different budgets as they have different tax obligations. For example, CapEx can benefit from capital allowances, and this is the main reason that there are 2 different types of expenditure and not just the one.